The ghost of the Hindenburg Research Report continues to haunt Adani Group. Over 6 months after the US short seller came out with the report, levelling serious charges against one of India's biggest conglomerates, the auditor of one of its firms has quit prematurely. Deloitte quit on August 13th as auditor of Adani Group's port company, Adani Ports and Special Economic Zone, or SEZ. It had sought an independent external examination of allegations made in the Hindenburg report, which had come out on January 24th. In the resignation letter, the Big Four auditor said it could not thoroughly scrutinize transactions between companies in the group and the logistics unit. Related party transactions were at the heart of the Hindenburg report. In its response, SEZ said the report's allegations had no effect on financial statements, and the reasons cited for quitting were not convincing to warrant such a move. The Adani Group had also rejected the Hindenburg report's allegations. Deloitte had been the auditor of SEZ since 2017. It was given another 5-year term in July 2022. Just a few months ago, in June, it had also snapped ties with Byju after the edtech company failed to file its annual financial results in time for the financial year 2022. And in the first week of August, another Big Four firm, Pricewaterhouse, resigned as auditor of Paytm Payment Services Limited. These recent high-profile exits have once again brought focus back on the delicate ties between auditors and the companies they vet. Statistics collated by tracker primeinfobase.com show that a total of 38 cases of auditors exiting before the completion of tenure were reported in 2022-23. It is a decline from the 46 exits seen in 2021-22. In recent years, the maximum exits were seen during the pandemic year of 2020-21 at 65 such cases. Auditors don't only ensure compliance with regulations, but also contribute to the company's adherence to the laws. They hold responsibility for the financial results and audit reports of the company. The Companies Act mandates them to report irregularities to the government, and they pay a heavy price for lapses. Of late, experts claim that auditors have become a tad more cautious, especially after the May 4th Supreme Court ruling. The Apex Court allowed the National Company Law Tribunal, or NCLT, to proceed with its inquiry and any subsequent action against auditors of the bankrupt firm IL&FS Financial Services. The auditors in question are Deloitte and BSR & Co., a KPMG affiliate. The government had moved a petition in the NCLT in 2019 to bar Deloitte Haskins & Sells and BSR & Co. for 5 years, citing lapses in their audit. The government's aim was to disqualify erring entities from serving as auditors in any company for 5 years. Stating that the legislature should provide penalties for auditors' misconduct, the Supreme Court also affirmed that fraudulent conduct by any auditor was a grave misconduct with consequential actions. Against this backdrop, what do experts have to say on the role of auditors and why, in recent years, they have often exited before the end of their tenure?
The genesis of this focus on audit firms goes back to the IL&FS issue of 2018. And if you see what happened is that NAFRA, which is the National Financial Reporting Authority, as an oversight for the auditing profession, firstly had reports on the auditors of IL&FS. 1. 2 is the impact or the censure by NAFRA on one audit firm also led to censure of other audit firms of the IL&FS group itself, which were auditing other group companies. So this, I think, is the genesis, and this is a reputation, this is a huge censure, and the fines imposed and the Department of Audit Partners, etc., has led to auditors being more conscious about the firms they audit. No longer is it just a signature and collecting fees kind of a issue. Investors, regulators, and NAFRA, of course, are now closely scrutinizing the role of auditors.
I think the game has changed. It's more complex. It's interrelated across jurisdictions. many of these companies also have foreign investors in there with significant investments. So the standards are different. Their expectations from auditors are different. It's a more global governance regime that is kicking in. So I don't think there's one reason. It's a multiple of reasons where auditors have to take a larger view. I've seen that happen, where you had to measure what kind of disclosures you need to make overseas, and that's very. The auditors have to be very, very careful because they are international companies. They're multinationals in their own way.
In June this year, the National Financial Reporting Authority said that quitting audit assignments would not absolve an auditor of its responsibility if any fraud was noticed during its tenure at a later stage. So, is resigning alone enough?
We don't know what the background is in these cases. It would be wrong to comment on these cases, specific cases. Yes, quitting may not be adequate. They have to flag the issue, bring it to the notice of the board, the investors, the shareholders, lenders, because they have that kind of a trust was reposed on them. So it may not be adequate, but it could be mitigating the going forward. Their liabilities, both legal, reputational.
Deloitte had been auditing Adani Ports for 6 years. Their audit qualifications were there already on the annual report, and the financial annual accounts was passed by shareholders at the AGM on August 8th. So it is surprising that they chose post the AGM to resign 4 days later, right? So that. And second thing which is surprising is that an audit firm is taking reference to a short seller's report, which is an external report. In fact, if anything, the audit firm should be inside and it should refer to its own data points or management this one. I'm not against what Deloitte has pointed out in the accounts itself as qualified accounts. But making reference to a short seller who is external to the company, that is, I think, a bit strange.
With auditing becoming a more complex process and investors and regulators becoming more active in recent years, auditors have had to let go of clients before the end of their tenure when they have felt that the cost of continuing may be too high. However, experts welcome this increased scrutiny and say it will prove to be beneficial in the long run.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.